In this video, we'll go over the optional step of the accounting cycle, and that is the worksheet. I just have one small PowerPoint slide here for you, and then I'm going to get into our problem illustration, accounting cycle from start to finish, and go through that with you. I've already completed the worksheet for this, and I'll just kind of explain it for you so you can see how this step works. Okay, so basically this is a one-stop shop for us to be able to see a bunch of different things in one location. A lot of people like this, being able to take a look at multiple things like the trial balance, the adjusting entries, the adjusted trial balance, the income statement, and the balance sheet, all in one location. Now, the basic primary reason you would do this would be to help you prepare the financial statements. So typically this would be done between steps 5 and 6 of the accounting cycle, between when you finish the adjustment process and before you would do the financial statements. The one thing that we have to caution you here on is that it does not include the statement of owner's equity, so that kind of throws a little bit of a monkey wrench into things. The reason being is when you think about this, the nice thing is that your income statement that you prepare in step 6A will match up right with this document. So you should still see a net income figure matching your income statement figure. So if you have a net income or net loss, they will be identical. The difference comes in when you get to the balance sheet. And remember that your balance sheet totals will not be the same as your formal balance sheet you prepare in step 6C. So let's see how this works. It's going to minimize this and go right into the actual completed problem of the worksheet here. So again, we'd have our heading, we're preparing a worksheet, and the specific date. Now notice that the first thing that you would have would be step 4, which is your trial balance. That would be there. You'd start off with directly copying that in from step 4. So the thing that you want to remember here is don't include any accounts with zero balances. Sometimes textbooks may include those, and in reality, in real life, we definitely wouldn't include any type of account that has zero balance. So just keep that in mind. And then if you look at step 4, you can see that this is the exact trial balance that we had back in step 4, $86,880. So it's just copied right into there. Now notice what I've done. You have an area in the next step here for all of your adjusting entries, and that would be step 5A. So all you're doing is taking in your adjusting entries, putting them into this format, just copying basically right from your journal all these 4 entries here. Now remember that we will be using some accounts that we haven't used before, so that's why they appear down here. And I put all the adjustments in blue, just like I did back in step 5A, to kind of keep consistent there. So you can see that all of these accounts, they were not up here, so we had to add them in. So again, we just directly copied them. It totaled out to be $1,500 on both sides. Then we did our adjusted trial balance, and basically this would also mirror step 5C. So we noticed that we would just take into account any of the changes. If something like, obviously you can see off supplies, you had $2,000 here, you credited it for $1,000, so we have $1,000 debit balance there. So again, this will mirror directly this whole adjusted trial balance, what you did in step 5C. We can check on that, and we can see that our adjusted trial balance is indeed $87,080. So most of this stuff is a lot of repeat, kind of repetition here. It gets a little bit more complicated as we move across. Remember, the income statement will mirror what you prepared, so let's take a look at this area here. I put the revenues in green and expenses in red to kind of help you discern this. So we know that total revenue was $16,600. we know that total expenses was $8,480, and we can go back to step 6A and look at that. We can see right here $16,600 total revenue, $8,480 total expenses, and then we see our net income of $8,120. So we know that it's the same. Everything here is identical. When we get to the balance sheet, that's when we start to see a bit of a change here. We don't have the statement of owner's equity on this. We have no way of calculating total assets, total liabilities, or owner's equity. The one thing that you'll do is you'll take everything besides revenues and expenses from the adjusted trial balance and put them on the balance sheet here. So remember, we haven't updated our statement, our owner's equity balance, our capital balance yet. So what's going to happen here is when you add these up, since we had a net income of $8,120, we have not transferred that to capital in a closing entry, and we haven't really subtracted out our withdrawals. So we still have to include those things here. So we add everything up. Notice that because we have yet to transfer net income to capital, we are short the amount of net income on the credit side. And that's because we would have increased the capital account by the amount of net income in a closing entry. So if you think about it, if you have net income, your amounts will be here and here. If you had a net loss, your amounts would be here and here. So the reason if it was a net loss, it would be a debit on the balance sheet is because think about it in a closing entry scenario. If we had a net loss, we'd have to debit and reduce capital. So this is just an aid to help people prepare the financial statements. Some people really like this because of the fact everything's kind of in one location with the exception of the statement of owner's equity. So this concludes our accounting cycle from start to finish video series. The next video will pick up chapter 5 and we'll be talking about a switch in kind of philosophy. We're going to be moving from service-based businesses to merchandising-based businesses.